Pashupati Advani joins in right here in our studios. Good morning. Good to have you as always. How long are we going to just dilly-dally, beat around in a range up until elections? That will be quite a stretch, right?
Unless we get some direction that something is happening. So maybe after the voting and some polls, then there'll be some excitement. But I think a lot of people are sitting on the side because of the fear of a sort of not conclusive government one way or the other. So I think that's what the challenge is right now.
What are you expecting?
Well, I think that the present government will continue, but maybe not get a majority, and that will actually put brakes on things. And I think that it'd be nice to have one government or the other government, but I think that having a hybrid is a bit of a challenge. But that's Indian politics. It's been hybrid for so long that we've forgotten what it is. This is the only government that's been conclusive for a long time. So let's see what happens.
So for the market, what is it that you do? Do you already portfolio build, or do you wait for some certainty with regards to elections, because that's where perhaps you'll get a deeper correction?
No, I think you have to sit on the sides, because what's happening right now is, I'm a great believer that our market works on supply and demand, and right now, FIs are sitting on the side waiting for something to happen, because anyway we're at like our highs. We're not like exactly a cheap market. The domestic FIs, SIPs seem to be going down. They're still positive, but they are actually going down. And the traditional, the insurance companies and things are investing in this, the government divestment and things like that. So that's also sucking a lot of money out of the system. So net money is coming out of the equity markets. The only good thing is that there's not a lot of new issues, except for this, like the Bharat 22 ETF that took some money out of the market. So I think that we're in this holding pattern, which is not good for brokers, not good for TV channels, not good for people who are in the industry, and it's actually very frustrating. And in this kind of environment, you actually have a lot of people walking away from the market, and that's not healthy.
Okay, but let's talk about where there is opportunity. You had spoken about the currency move benefiting certain sectors.
Yeah, well, I actually think that the rupee will probably get weaker in relation to the dollar. There is that flight to quality in the sense that the US is pulling money back, but their economy is also not in that great shape. But I think that as the rupee gets weaker, it's obviously good for IT companies and pharma companies. And pharma seems to have got hammered recently, so there are opportunities in that space. I should be in IT, but I'm not, so that's another challenge that I face. But that's a personal bias.
So are you two behind the ICICI banks and Yes banks of the world, or not quite?
See, I don't think the issues are over yet. So yes, there's a flight to quality. So HDFC, IndusInd, and Kotak are trading at huge multiples. The three that you just spoke about are looking like value buys.
Yeah.
Looking like value buys. But again, Axis was at its all-time high, and then suddenly the government decides to unload some. So who knows? And I personally don't believe the problems are over at ICICI by any remote chance. So I would actually wait, because I think there'll be some more explosions to come, because corporate India is not yet sorted out, and I think there's those issues also.
Oh, really? So you've completely stayed out of ICICI Bank?
Yeah, well, I was in and out, but I think that, or should I say out and in? But I actually am not particularly bullish about that sector, and I think the NBFCs are hurting even more because they're not able to get funding at a cheap rate. The so-called risk-free rate should be a lot higher than it is. It's FDs are at about 7.5. So actually they should be even higher. But since the government is the major borrower, they've kind of pressured the banks not to raise the FDs. But I think we are having challenges, inflationary challenges also, and things aren't working with those kinds of interest rates.
Yeah, speaking of challenges, there's lots of companies, that are perhaps in some sense biting off more than they can chew. We saw the SL Group as well with respect to their investments in infrastructure, which the management acknowledged is a very big pain point for the company. Imami now selling off their shares, and they've got money in businesses like cement and solar, etc., which haven't worked out. How are you looking at this sort of a trend, and it's fairly detrimental for shareholders?
Yeah, I mean, both these names that you spoke about have actually come out of the blue because they were perceived as very strong groups. Yeah. And that's not so great. And, when SL is talking about selling some of the jewels, that's a challenge. But let's see what pans out, whether, this is talk. Of course, you said Imami has sold 10%, which I saw, but they've got a huge debt, and they've also got a huge foreign business as well. So, again, that's the capex expansion that hasn't worked. And there are a lot of companies that have gone in for capex, and we'll have to see which ones work and which ones don't. I mean, companies in specialty chemicals are doing well, so they will turn because the demand seems to have gone up. And we are substituting some part of China's trade, so I think those companies also will continue to do well. So, time will tell.
Okay. What else do you buy and stay away from?
Well, I think this is the time to, if you want to speculate, the people are looking at real estate that has got hammered. People are looking at infrastructure that has got hammered. There are going to be opportunities, but with those, they're going to be high risks. So, I've, played a little bit in Jayaprakash Industries, which is now below 5.
That was back in the day, right?
Yeah, but, it had one flip.
Current level?
Well, it might be worth it to look at. They're trying to do some, a plan. If the plan works out, then, the market's saying the plan's not going to work out. But,
NBCC, I understand, is in fray for JP Infra assets.
Yeah. So again, they're picking the assets, but at some point it doesn't make sense to do the deal. So
and you like cement as well, right?
Yeah, I like cement because I think that there is some development. The government is a big buyer of roads and things, so that's also happening. And builders also have to finish their projects, and the original builder may not own the project, but someone's got to finish it. And I think that's also happening. So the demand for cement is there, and it's not as robust as it is because people don't have the money. But I think that it is there in the background, and certainly mid-cap cement looks a lot cheaper than big-cap cement, and therefore those are the places to buy because there will be consolidation.
What about the consumption space? I'm just taking a name here, Nestle, when it came to earnings as well, didn't really meet the mark. And analysts are very concerned that the kind of valuations that it's demanding, it's not able to sustain. How are you looking at the overall valuation scenario within the FMCG or even the consumption space as a whole?
Well, we are a nation of consumers, and also our incomes are going up. So I think that the consumer space is good. Of course, Nestle's got other challenges because we've got Patanjali in the works trying to undercut them on just about every single product that they have, except the Maggi. Unfortunately, the Maggi problem is behind them because they seem to have sorted out their supply chain. But I think that space is growing because people are moving to quality and are willing to pay a little bit more. But I think it's the wrong time in the cycle. So I think that to pay 50 PE for a stock like Nestle is a challenge. But again, if you're building a portfolio from scratch, it's probably not a bad stock to own in your portfolio. So it's one of those. It's like HDFC Bank. It's very high priced, but it's in everyone's portfolios.
Yeah, it is. Okay, great to have you on the show. Thanks so much for taking the time.
Thanks very much, and it's always a pleasure.
Quick break then with news that we are holding okay so far, no weakness that typically we see within an hour of trade open. The Bharat actually is positive and holding out well in favor of the advances. Let's see which